So what we're going to do, I'm just making, because we're going to be away. I think the next one is going to be sometime in late November. So in the meantime, we are giving you a couple of, yes, I mean, as I said, I'm very happy that Maud and FX3 have extended this invitation. They are very gracious, and I'm very honored and humbled, and to join all this fantastic group of traders that are in FX3. What we are going to do is this. Next Sunday, as you all know, we have been doing the Sunday session, and it's one of our things that we do here in Spyglass by preparing our trades for every week. So to cut a very long story short, some of you have joined us, and they have enjoyed it, and they have seen the results. So anyway, a lot of people have sent me emails that they want to take a look and join the Sunday session. So we are extending an invitation for next Sunday, which is going to be this coming Sunday, as an open invitation. We're opening the room for everybody, free of charge. We don't do sales pitches. The room is open for everybody. It's Sunday. All what you have to do is go to the website and register, hopefully before Friday, so we can send you your password in time. And after you join the Sunday session, we will record it and upload it to the website. And if you're unable to make the Sunday evening because you have something else to do, we will record it, and with the same password that you're going to receive, you can access the recording for a whole week, so that you can pinpoint your entry and exit to trade the following week. Okay? So all what you have to do, just send an email to info@spyglasstrading.co.uk, and they will send you the password. And please do it before Friday, so you can get a timely. Okay. Today we are going to do, I think as I promised you last time, I'm going to show you how to identify. Okay, I'll give it to you at the end of the lecture. So because we want to make sure that we do this is a big topic, and now, okay, good. So what we're going to do today is, we have seen in the last few sessions how to trade the momentum and how to trade the breakouts and how to trade in a momentum market, and the rules of trading a market when it's trending. No screen again. Okay, I'm trying. For some reason, I'm trying again. Okay, thank you guys. Let's start. Okay, let's start. So we have discussed the three market conditions. Okay, guys, thank you. Hold your questions. I will open it after the session. As long as Maud is kindly to allow us to stay, I will stay with you. Don't worry. I will try to answer all your questions, because the next one is going to be at the end of November. So as long as they are able to stay, I know they have a lot of schedules and stuff like that. I will stay with you as long as they allow us, as long as their schedule allows. So we discussed the trending market to catch the trending market, and how to trade in a momentum market, and how that momentum precedes price, and we're trying always to buy, and of course in a sideways market. But the trick is, how can we identify when the trend is finished, and now we're going to change, the trend is changing, and now let's say if it's coming down, it is going to go up. So the biggest call, let's say, or the thing that all the technicians were talking about is the Dow Jones, and when the market turned around, when the big bull market has ended, and we started coming down, and we started this down leg, or the bear market in the last couple of years. I'm going to show you how you could have anticipated this move, and how you would have traded it successfully. And this is a true trade, and I will show you the actual report that we have done at that time. So let's put the Dow Jones. And the first thing that you do, guys, this is the Dow Jones, the charts for the Dow Jones. And we're going to go to the beginning in 2000. And the reason I'm showing you the Dow Jones is because it is relevant to all of us, and we all saw it. And I will show you also in a couple of currencies if time allows. Now, the first thing you do when you're looking at the chart is like this. I mean, this is the picture in front of you, and you take a big mental picture of the chart, and you ask yourself the 4 questions that we have learned to ask before. The first question is, what is the market condition? Am I trending or I am in a sideways market? As you see here, we are trending. I mean, this thing is in a bull market. It started at, if I narrow it a little bit, you can see that the Dow Jones, the bull market in 2003 started, excuse me, this was the low in April 2003. The low on the Dow Jones was about 7,500. And we began a bull market. It took us all the way up to 14,000. So you're looking at the chart like what you see here, and you can see that you are in an uptrend. So now we get to this point here. This is the uptrend. And the thing, if we are going to look at a trend change, if we're going to identify a trend change, no, there is a sound. If you're going to relog in, if you're going to identify a trend change, you have to follow the rules of technical analysis. And the rule is, in a trend, it takes a great deal of time and a great deal of effort for the trend to change. And that the amount of time that the trend requires to change is very relevant from the starting, how long this trend has been in place. So as you can see from here, it's from 2003 all the way up to 2007. It took 4 years. This upward trend took 4 years. So if it's going to take some time to change, an effort to change, it wouldn't change on a dime, it wouldn't change in a week, or it wouldn't change in a month. It will take a lot of effort. Why will it take a lot of effort? Because a lot of traders are still convinced that this is an uptrend. So if we're looking at this chart right now as is, and we want to trade, should we be buyers or sellers? The question is, again, the 4 questions. What is the market condition? In this case, it is trending. Which way the direction of the trend? As you can see, it is up. And you ask yourself, do I have a trend changing pattern? Do I have something that tells me that the trend is going to change? At this moment in time, I don't have a trend changing pattern. The only thing that gives me a trend change is what we call structural failure. That is the key to changing a trend. Structural failure. Okay? You're looking for a structural failure because the trend and the chart is like a building, like a building, and the building is built on columns. It's built on structure. So as long as the structure is intact, then this trend is intact. Okay? So what is my structure? So right here, if I don't have a trend changing pattern or a structural failure, this means that the trend is still valid and I should be looking for a way to get into the trend as a buyer. So right here, this is my high and it's at 1260. So a lot of people would say this is too high or something. So at 12,768, if the price goes and take out this momentum high, and the rule is momentum precedes price, this is my momentum high, then I am a buyer above 12,768. And I will keep on, I will be a buyer above the momentum high. And now this is my new momentum high. And you see it's pushing up to 13,000, 1350. I will just space the bars. Give me a second. I will increase the distance between the bars for you so you can see it better. But anyway, I'm spacing it, but I shrunk the distance, the spacing so that you can see the trend. And right there, this is our momentum high. And if it gets above it, we're buying it again at this momentum high. And we're staying with it as long as the trend is pushing up. And right there, this is my new momentum high because I had a few days of a correction. And I'm still using that as a buying opportunity. So if it takes out and trades above this, I am going, hold on a second, Stoyan, let me finish the point, and I swear I'm going to answer every question. Because just let me finish. Okay? Now, once it takes that high, don't be scared to say it's too high. There is nothing in trading that's called too high. And there is nothing in trading that it is too low. Now, the rules in a trend is this. The key in a trend is, that's the definition of a trend. It is a series of higher highs and higher lows. The key word, the most important word in just what I said, the most important word in this line that I wrote is not higher highs and higher lows. The most important word is series. i.e., it is going to keep on doing more higher highs. And at the moment, my first signal that there might be a trend change is when it fails to make a higher high. That when it fails to make a higher high, that is my first caution signal that there might be a trend change. It is not yet a trend change. Okay? It is not yet a trend change. It is just a signal that there might be a trend change. So as long as I did not get a lower high, this means that the trend is continuing up. And even if I get a lower high, this lower high by itself, you need two things to get a trend change. A lower high is one. Two, you need the structural failure. So if you get the first failure to make a higher high, that is your first signal that there might be a trend change. So right here, everything is intact. It is making higher highs. It goes all the way up to 14,000 and it comes down. And this is a normal correction. So right here, I'm still looking to be a buyer. Now, I will just space it for a second. 1 second here. So this is the highest high that we got at 14,000 and the prices come down. This is a normal correction. I'm still looking to be a buyer. Then it pushes and it goes back to 13,076 and it comes back down. It sells off and you can see a big sell-off, a big momentum sell-off. So I will just identify this point as a lower high. And that's my first warning sign. I have a lower high. it is not yet a trend change. Where will it be a trend change? Here is the trick. You identify the lower high. That's your lower high. Okay? And then with your eyes, I want you to trace the starting point of the wave that failed to make this higher high. You're still a buyer, but if you have a lower high and it's coming down, you trace with your eyes the starting point. And as you see right there, this is your starting point. So your starting point of the wave that failed to make a higher high, this is your starting point right there. This is your starting point. So if the prices come down and trade below 13,131.63, and of course you find the exact number, that is your first sign that you might have here, right here, you might have a, what we call it, a TC, or a trend, a beginning of a trend change. Just the beginning. Now, and if you go short below 13,131, right here, you can go short. This is the first time you can execute a short with the assumption that you might have a trend change. And as you see, as soon as it breaks over here, you want to go short. And as you see now, you got the crash. It took you to a low of 12,519. You had about 700 points decline. That is a fantastic trade. I mean, when you take 700 points on the Dow Jones, that's on one contract, that's $3,500 if you're using a mini, which is a $5 a point. Again, it doesn't matter if it's Dow Jones or if it's currency. I would show you that in currency. The reason I'm showing you the Dow Jones, I'm going to show you that this is a live example of what I've done in 2007. Yes, hold on a sec. So right here, once you had the structural failure, you got paid 700 points. That's good. And then you get your pullback, and then it goes back again. And what happens here, it does a second lower high. So this is going to be lower high number 2. And the number of structural failures that you have, okay, relates to the size of the trend. How big? This trend started for 4 years from 2003, so it's very strong. And it goes up. So basically this is the, I will move the lower high to here. Now this now is the second lower high. So we are going to do the same. We're going to do the same thing that we have done over here. Here we identified the starting point. Here we're going to identify the starting point of this wave. And that starting point is right there. Guys, do me a favor, just wait 5 minutes. Let me finish, and then I swear I'm going to answer all the questions. Because all my presentations to you is live. I don't prepare a transcript or a PowerPoint because I want to teach you something, okay? So let me finish, and I'm going to open to all your questions. All right? So right here, this is the second starting point of this wave. So now our trading plan is we are going to go short if it trades below 13,025. It pushes up, it doesn't break the 1325, and it pushes up, so that is fine. and it keeps on going, and now it sets a higher high, so we are okay. This thing is continuing up. We get a second break, and now this is the latest momentum high. Right there, that's the latest momentum high. And now right here, I'm watching it. It breaks, and you want to see this capitulation. That is your indication that this high is in place, that it is followed by a sell-off. Look here. That's why price behavior, it behaves in the same way. So once it capitulates after a lower high, it capitulates. Here, it made a high, and then it capitulated. So now, this will become, let's say, technically my lower high number 2. And I'm going to do again the same thing I did before. I'm going to identify the starting point. And right here, that is my starting point. And if it gets below 13,411, I'm going to go short. Right here, that is your short. How many structural failures did we have? We had, this is one right here. That's one where we got paid the 700 points. And that is now my second structural point. Okay. And if we had 3, you're correct. You saw the third one. So if now, after a big trend, which has been 1 or 2 years long, it requires more than one structural failure. Why? Because the first structural failure, one group of traders are going to go short. And then after the second structural failure, more traders are going to be convinced that now we're getting into a trend change, and the second third of traders are going to go short. After the third structural failure, the big majority of the traders are all going to go short. And this day is around November the 6th or November the 7th, 2007. You see that? And now you get your capitulation to the downside. And right here, that is your confirmation confirmation that the trend changed. Why? Because you had a trend and it was followed by 1 or 2 or maximum 3. It doesn't usually go beyond 3 structural failures on the chart before you get a confirmation on the trend change. And that was around November the 9th, 2007. And that is your move to the downside. That is your trend change. And it went all the way down to 7,500. So if you took that, what I have just showed you, that you are taking the trend change right here from below 13,000, right there from here, I just did writing so from right here, which is the third structural failure, right there, that is your trend change. And if you went short from 13,130, you would have had about 7,000 points on a trend change to the downside. Now, if you recall that the low that we have identified in 2003 was this line that we put up as our momentum low in 2003. It was also the same momentum low. This is just the same line. I will show you. This is where we went at the 7,000. This is where we picked. You see, this is the momentum low that we picked in 2003. The prices came down in 2009, it always respects the prior momentum low. Why? Because the price, human beings do the same thing over and over again, so it respects this momentum low. You see that, guys? Okay, it respected the momentum low, so somebody would come to me and say, okay, Mike, the 7,509 is support. All right? Should we buy at 7,009? We can take some profits at 2009, but we are going to follow the same set of procedures and the same set of rules that we always apply in our trading, and that's the first thing we do. We ask ourselves the 4 questions. What is the market condition over here, guys? It is trending. Which direction is the trend? It is down. Do I have here a structural failure or a trend change? No, I have this lowest low, so it's making a low, it's making a lower low, and it's making a lower low. So I am still in a downtrend, and I'm still looking for what? My big trade is still to go short, because I expect the price to make a new low, trading below the 7,509. So if I scalp, even if I buy this on a scalp, I can buy it, but still I'm using this as an opportunity. And there you see it took the momentum low and it made a new low. Now, the key for us is this, because there are 2 things to find a trend change. A structural low, like I said to you before, or when it turns back and it comes above a prior momentum low. So this is my prior momentum low. So this means that if it trades at 7,600, we're going to do what? That is another technique of identifying the trend change, or a bigger correction, if you will. So we're going to buy it at 7,000, approximately 600, if it gets up there. So right here, we're going to go long. And this is where you are today. Now I'm going to show you, if you give me 1 second, I'm going to show you that this is not theory. This is not, this is actual stuff that we trade with every single day. And I'm going to put up for you, I used to write a newsletter. I want to make sure that you see it. Do you see this newsletter up on your screen right now? If somebody can say yes or no, I would appreciate that. Okay, hold on, okay, hold on 1 second. I'm just going to turn off the camera for a second. Hold on. Okay, do you see a white screen that it says Dow? Okay. This is the newsletter that I used to publish when I was on the floor. And it was called the Baghdady. That was my name on the floor, Baghdady. It's a nickname. Each person on the floor had a name. And anyway, this is on November the 9th, 2007. You see that? And this was the chart of the Dow at the time. And that is the wave that failed to make the momentum high, failed to make a higher high. And right here, this is the structure point. You see that, guys? Did somebody say yes? One guy or somebody? Do you see that? Okay. Now, Right, good. Okay, thank you. Look what I said at the bottom of that day. That is it. And see how many exclamation marks? Because I had 3 structural failures. That means that my trend is down, the stock market is very weak, momentum is now to the downside, and we're going to go for a further decline. And we are going to sell every rally. We're going to go, this is from November 2007 when the Dow was trading at 13,000. Okay, and I'm going to show you the entries that we took, that I give to the traders on the floor. This is the intraday, and this is, it's coming up right now. Do you see this? Do you see it right now? Where there's this table with the short from. So we began to short the Dow from, remember we just pinpointed together from 13,300. We're short from 13,300 all the way down to 6,000. And that's how you can pinpoint a trend change. And the stuff that I'm sharing with you is not theory. This is where we did it every day, and this is the newsletter from November the 9th, 2007. Press below, this is the little lingo. Press means add to your short. Push to the downside, add more positions. When you say press below, this means sell more. So when you buy, thank you, Jason. I'm not, I want you, the reason I'm showing you this is, I mean, this is public record, but when I'm showing you this is that I want you to see that when you see the same, and now I'm going to go back to TradeStation, and I'm going to make sure that you see the chart. I'm just going to make sure that I'm just, 1 second. Is once you see the structural failures, you do not want to go short after a trend unless you have a structural failure. So right here, this is today. This is right now, this moment, this instant in the Dow. So we ask ourselves the same 4 questions. What is the market condition that we have here? The market so far is trending. It's from March to August for the last 6 months. It is trending. Before, and it's trending up. That is correct. And it is making momentum highs. That's one momentum high. That is another momentum high. And it is making another momentum high. And this is the last momentum high. Thank you. So the idea is, right now, do I have a trend change? Should I go now and short the Dow? Thank you, sir. No, we don't. We still do not have a trend change. I need to see here a structural failure. Even though it comes down maybe another 50 points or so, that's okay. But my trend change, I can be where this is my structural right here. This is, when we say structure, I want you to think of a building, and this is the column beneath the building that is carrying that's carrying this whole price action. That is what's lifting the chart. So in this case, I don't have a failure to make a higher high, but I have here a momentum high right there, which is 9,600, which is pretty much close to my structural low at around 9,500. So between those 2 points, I can say now, if it trades below the 9,500, thank you, sir, I appreciate that today. So if it trades below the 9,500, that's my fail, and now we are selling. We are going to do what? We're going to do like what I said in the letter. We are going to press below the 9,500. And once the prices, as long as the Dow Jones is above the 9,500, there still is a chance, yes, there is still a chance for a retest of the high or a failure to make a higher high. All right? And now we have our structure. So if it comes down to here, we can think of buying. We can think of buying, and that it is going to go up. All right? Now you say, guys, we are now, what's the percentage of the structure failure? Close to 100% that it works, as long as you correctly identify it, Ned. Okay? You will always get paid. You will always get paid on it. The magnitude of payment relates to how big the structural failure is. Okay? So if it's a small structural failure, you get a small payment. If it's a big structural failure, you get a big payment. And you always have to take into consideration the big move. Let me show it to you. Yes, press means add to your position. Now, we are in a foreign exchange community, and you see, some of you, I know nobody did say that, but I would say, why? Okay, Mike, this is a foreign exchange community. Can I see that in a currency? Okay? No, I don't use trend lines. I don't use anything. Thank you, sir. Because these are all illusions. A trend line, a moving average, that is always an illusion. You can always see it in your eyes. I mean, you don't need a trend line to tell you that it's going up. And if you put a trend line, I will get into that. So, yeah, if you see it up, you can use it. But you want to make your decision based on the structural failures. And now, let's try a currency, okay? And I'm going to show you the structural failures and how to identify a trend change live, okay? I want you guys to choose which currency I'm going to show you. Choose anything you want. Okay, so we got people talking the pound dollar, the euro dollar. Let's take the majors. Let's take the majors. Either the pound dollar, the Aussie dollar, the euro pound, or euro dollar. So okay, the majority is talking about the dollar, the pound dollar, and the euro pound. Let's do the pound dollar. In the Sunday session I do them all. So let's take the pound dollar. So what I'm going to do here, I'm going to put the pound dollar, and the reason I'm doing this is that I want you to see that if you know what you do, you can trade anything. You can trade currency, you can trade stocks, you can trade commodities, you can trade shish kebab if you want. As long as you can put it on a chart, you can trade it. If you follow the same set of rules, you can always follow it. Okay? So, now let's start going back a little bit, and I'm going to go back to 2000. And okay, so let's start from here quickly. Anything, it doesn't matter any time frame. A chart is a chart is a chart. The rule is, this is your rules, guys. A chart is a chart is a chart. It does not matter if it's a daily chart, a 5-minute chart. Yeah, except lumber, Paulie. Lumber has a mind of its own. But you still can do that, in hindsight, okay? So, look at this. Let's ask ourselves the first question. First, what's the market condition here? Is it trending or it's trending down? And I do have, and look at here, guys, quickly. I'm going to do this quickly. I'm going to use, that is your lower high. It has failed to make a higher high. Here, it has failed. This is lower high number 2. So, where is my structural point, guys? You're going to take the starting point of chart number 2 right there at 1.867. And if you go short right there, that is your trend change right there. And you took it all the way down to 172. So you made about 2,000 pips. Can I refresh? Okay, I'll refresh, sure. Is this okay? Okay, lovely. So now this is my momentum low. That's my first momentum low. And then it pushed down. It made, come on. It made a second momentum low. So the trend is going to go down. The spikes, this one here, this one, I talk about this one, Dorix. This is nothing more than another lower high number 3. And that's the definition of a trend. You don't see the pointer right now. Okay, let me put the pointer for you. You see the pointer there? Okay. So that is the point number 3. And that's the definition of a trend. It's a series of lower highs and lower lows. So I'm getting lower high number 1, lower high number 2, lower high number 3. Fantastic. And I'm getting lower low number 4. And right here it made another lower low. You see that? So up till this point, my trend is what is intact. And I'm looking for what? I'm looking for a further decline down. Now it's moving sideways. And I begin to see some momentum coming in here. So what is this? If this is my momentum low, I am looking for what? For lower lows. This is a daily chart. I am looking for lower lows. Did I get any lower low? It's a higher low. So if it's a higher low, I'm going to trace with my eyes the starting point of this swing that failed to make the lower low. What is the starting point? It's right there. So we are going to buy, if the prices go above 179, we are going to buy that. Exactly. Take a look. And you want to see when it breaks above 179, you want to see that the break with momentum. Do you have a break with momentum? Right there? You see that? Yes, you do, my friend, here. You see that? That's a break with momentum. That means what? That you have identified the correct structural point. And look where does this baby go. Now you have a trend into the opposite direction, and kiss that baby goodbye. No, this is about, it's not 3 months, it's 3 attempts. There is one, it's about 3 attempts. I mean, this is not an exact science, Talha, because again, the market is an illogical beast. There are millions of people are trading. All what you have to do is just make sure that your reference point is the right one, like we have identified. And it took, this is from November 2005 until April 2006. So it took more than, it's the same. And take a look. Now, before we finish the session, I want you guys with me now to identify where we are going to turn bearish on the pound. So, we are asking ourselves the 4 questions. What's the market condition? Is it trending? No, you don't estimate. You have to pick the structure point. You cannot say 194 right now because you don't have a structural failure. You don't have a failure to make a higher high. You have nothing yet. The trend is still intact. So I'm looking for a buyer to be a buy. And then it goes up. It makes a higher high. So the trend is still intact. I'm looking for a lower high. That is my first lower high, and that is my first little structural break below the 203.47. And since the trend is so big, it will make at least one or two more attempts. But in this case, it is beginning to push a little lower. Let me space this for a second, just so you can see it better. And you can see how clear now the structural failure is. This is number one. Remember, we want more than one structural failure. This is number one. And then I have number two. So right here below, and so we are going to go short below the 201, if you will. This is right there. I'm showing you to you, so you're going to go short right below the $2.01. It comes back and retested. That's your third attempt. So based on this is first structure failure, second lower failure to make a lower high. This is point number 3. So where is the beginning of the wave that failed to make the last high? Below 193.45. If it takes below 193.45, there you are, and you get the momentum capitulation, doesn't matter, and you go short from 193.45, and bye-bye. Now, what I have done, and this is what the software that we have done, I just want to show you. I have explained to you exactly which entry, where to go long and where to go short, and we all identify them together. There is no moving average, there is no algorithms, there is nothing. We identified the structure, the momentum highs, and this. So all what I'm going to do is, that's how professional traders trade, is that you need something, the price action, and you need something to keep us on the right side of the market and to confirm to us our bias. So I'm just going to turn it on. And look, where did we go short? Below the 196. The second, which was a little bit higher. And that is the short in the pound. Let me just, hold on a second. I'm just going to take this 500. This is how many lots we trade. So I'm just going to make it 1 so it doesn't... So we are short the pound from 196 all the way down. Every blue line, that's a winning trade. That's another sell-off because it took the momentum low. It breaks the third momentum low, you take it short again. Then it gets into the sideways. This is where you just begin now to be careful. Now it reverses to the upside. There is your buy. That's the break of the structure to the upside. And right there, when it breaks the momentum, you close the trade. Every swing that you will take, exactly. And right now, we're still long the pound. And that's one, I mean, the last time I showed you is the short-term system which we use in the day-to-day trading. But once we have a structure failure in the breakouts, this is for the position and the portfolio trading. Okay, so with that, I think I have explained to you the how to identify the market condition and how to see the reversal and what are the key things to look for when you want to change the trend. Okay? So with that, and again, what we have also done, just to let you, what we've done is that we put, because structural failure and price behavior works on anything. Like I said to somebody a minute ago, I can trade shish kebab, or you should be able to trade shish kebab. Okay? And I'm not kidding. This is the truth. Look at the scanner that we have. This is our scanner. We put everything in it. We put stock indexes. We put currencies. We put all the currencies. We put grains. We put meats. We put metals. We put softs. We put grains, energies, oil, stocks. It doesn't matter. Because why? I don't need to curve fit. I don't need to tell you that the 25 moving average is better than the 13 moving average. It's better than the, I'll show you a gold chart. It's better. These numbers do not know, the numbers does not know if this is gold or if this is oil or this is rim. It doesn't know the stuff. So how can I tell you that the 23 moving average is better than the 25? I am curve fitting. But if you follow structure and follow human behavior and price behavior, you can trade anything. So just take a look. And what it does, this thing scans the market all day long live. And as soon as something comes up, it will give you a signal, buy. So for example, Apple. It's long Apple from August 21st this year from 168. And if I click with mom, that is your Apple. So it's long from 168. Now Apple is trading at 194. You got $30 a share. Exactly. I mean, for the long-term trades, everything, the daily chart has to be involved in my decision-making process. And let me just finish this. If you want to take crude oil, that is your crude oil. Look at this. That I'm going to show you the equity curve so that you don't think I'm. Look at the equity curve. For the last 100 trades, this thing is going perpendicular. Look at this. Everything fails. There's nothing foolproof. If I'm going now to change Apple, I'm just changing the symbol. I'm not doing anything. And I'm going to leave for you the equity curve. For the last 25 years, you did not have one negative year in Apple. It's kind of making money, Jason, or Splow. Whatever makes me money or whatever makes you money, use it. The question is, you cannot trade breakout all the time. You cannot trade, you need to trade the right market condition, and that's how you maximize your profit. Because if you're buying support and selling resistance, do you have an example where the structure failure has taken place? Okay, so now the presentation is over. I thank you, and it is open for questions and answers. Of course. Like everybody else, we all lose, we all make money, we all lose, there is nothing 100%. Thank you, Hassan. A gold shot. Okay. So I'm just going to type in just the symbol. I'm not going to put anything other than the symbol for gold. That is your chart for gold. We bought the last gold at 974 and we closed the gold at 1,043. So that's about $100 an ounce. I think these guys need to go. So I want to thank you all very much. And if you want to join us on Sunday to see how we prepare our trade plans, doing this live for our next week trading in the foreign exchange, just go to, thank you, sir. Just go to Spyglass Trading and thank you. God bless you too. just go to Sparkler Trading, sign up, and we will send you an invitation so that you can go in and join us in the Sunday session. Okay? There is no charge. Even if you see that there is a value there, there is no charge. Nothing's going to be charged. Okay? Thank you very much. God bless you all, and have a lovely day. And I hope you... Oh, you're offering me the shawarma, and I haven't eaten it yet. Promises, 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 Forex champion. Thank you all, guys, and have a great afternoon. It's been a pleasure. Thank you, Maud, very much. I appreciate it. Thank you, Adinda. Thank you. Thank everybody in FX Street, and I hope to see you all, guys, very soon.